Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Growth and income stocks, the topic of conversation here with Alex Kolb, our growth and income stock analyst at Zacks.com. And you've got a couple of good growth and income picks here. First of all, Target Corporation, TGT, the ticker symbol, the retailer, right?
That's correct, yeah. General merchandise retailer known as Target and Super Target, very familiar name. These retail plays right now really continue to do well, especially the discount ones, and for obvious reasons, based on the economic times.
Yep.
One thing about Target, another segment that it has in addition to retail, they actually issue credit cards. So I thought that was interesting.
Interesting, yeah.
And they recently reported the first quarter. They had a great first quarter. Management said that all segments did well. All segments either met expectations or were above expectations. And if we get into some specific numbers here, the fundamentals look really good. The first quarter earnings per share of 69 cents, that came in 15% above the consensus estimate, as you can see. Sales were slightly higher year over year. And another good component of this company's fundamentals is the dividend. It has
I saw that.
Yeah, annual 64 cents.
2%.
Yeah. That's it's not huge, but in this industry, 2% is industry leading. It's up there for its
for
industry.
A retailer.
Yeah,
given what's going on.
Yeah. They're rewarding shareholders with income. So the fundamentals are solid, as you can tell, and that translates into earnings estimates that are on the rise. For this year, as you can see here, analysts are currently forecasting $7.81 per share for the full year. That's up from last month's $7.46. So all around, I think there's both growth here fundamentally and income, as you can tell by the dividend.
All right, and then you want to also call to our attention Allied World Assurance Company Holdings. Wow, is that a long name? AWH. Let's leave it at AWH, the ticker symbol. Where's the growth? Where's the income here?
Well, this you said the name is long. It's basically a property and casualty insurance company. Also does reinsurance. Also in the fundamentals as far as growth and income, and actually also there's technical growth, which I'll go into soon. The first quarter report for this company looked great as well. Earnings were at $2.67 per share. That beat the consensus estimates by 45%, and it was also above the year prior. The company in its first quarter report also declared a dividend on the income side here. It's an 18-cent dividend. That's the quarterly dividend. It translates into a yield of 2% as well for this insurance company, also an industry leading yield. And the strong fundamentals here also translate into solid earnings forecasts, as you can tell. They reported in early May, and shortly after reporting, based on the results, analysts hiked estimates. In just the past week, as you can tell here, for the full year, went from 272 to 283 per share.
It's interesting that you bring this one up now because of all of the insurance companies reporting that they're raising their premium rates by double-digit percentages in many parts of the country.
I picked this one specifically, it's an interesting point you make, and that is kind of why I picked this one, because you don't see a lot right now in insurance. Also, it being under the financial umbrella overall, not a lot of insurance companies are doing well right now. This one consistently keeps coming up on my screen for growth and income stocks. So the fundamentals are solid with this, and as you can see, analysts are optimistic on it. So yes, as a general rule, that's probably an area to stay away from, but there are good picks everywhere in all industries, and right now this one continues to do well.
Well, my point was going to be that with them raising their rates by double-digit percentages, it's not a hard guess to see where the income's coming from.
That actually translates into a positive. Yeah, you're right. In that respect, you're absolutely right. I made a slightly different point, just urging or cautioning about what's going on in the insurance industry. But yeah, when you increase your premiums, sure, that's going to translate into profit.
Sure.
So again, fundamentally, things are really strong here. A couple more quick fundamental things I want to point out. This company does have a return on equity of 20%, well above the industry average of 7%, and a net profit margin of 15%. That also tops an industry average of 3%. All these good, solid, fundamental things translate into strong technicals. If you look at the chart here, over the past year, the company has outperformed the S&P. There was a particular boost here just recently after the company reported. Shares are on the rise, so this may be a good time to get in.
All right. Do you own either of these two?
I do not.
You can take a check on more growth and income stock picks that Alex has outlined for you on Zacks.com. Go to the homepage, look over in the upper right-hand corner, and there is where we list all of the Zacks Rank by stock categories. Click on the headline next to the growth and income category, and it'll take you right to Alex's most recent piece and some others that he's written recently as well. With Alex Kolb, I'm Terry Ruffalo.